What's up, guys? I just want to. So first of all, I just want to say thank you for all of the comments that I've been getting lately in the Discord. It just motivates me to keep on recording videos for you guys. A couple of people DM'd me asking for my step-to-step process of what I do daily in the market. So I just thought I'd hop on and make a quick little video detailing my step-by-step process of how I trade and what I do um, in market open, basically. I'm not going to be covering pre-market or risk to reward or managing risks because I feel like it would make the video too long. So if you want me to make another video like that, just leave a comment down below and I can do that. But this is just going to be a detailed step-by-step process of exactly how I trade. I do the same exact thing every single day. That just helps to build consistency. Uh, so essentially, the premise of my trading style is identifying relative strength and weakness in conjunction with these key levels, psychological levels, and supply and demand price imbalances. So I'm a contextual trader, meaning I take into account everything, where price imbalances are, where key levels are, momentum, volume, ES and NQ VIX themselves, some impulse consolidation. So each one of these things tells me a clue, and then I put the entire story together and I execute the trades. I just want to quickly talk about the first thing I do, and the first thing I do is identify relative strength and weakness. Let me just make sure I'm recording. Yeah. So what is relative strength and what is relative weakness? Well, to understand that, you have to understand that the equities I trade are the large cap equities: Microsoft, AMD, Boeing, Baba, Nvidia, and then a couple of other tech equities like Apple, Tesla. So these are very, very large tech equities with high option interest, and they're a huge part of SPY and QQQ. So these 9 or 10 tech companies make up the majority of SPY and QQQ. And because they are such a big part of SPY and QQQ, they should follow SPY and QQQ essentially to the tick, because they're a big part of them, they should resemble the movement of SPY and QQQ almost perfectly. But when there's specific interest in a equity for a certain day, you'll see that it doesn't really follow SPY and QQQ as well as it should, and that's where relative strength and weakness comes in. And basically, I'm identifying where is the most interest in an equity for a certain day. So let's see. Yep. So how exactly do I find relative strength and relative weakness? So when I identify relative strength, I want to see bullish signs like higher lows, while the futures themselves, ES and NQ, are making lower lows. So I'm gonna give you an example. AMD on Tuesday, you can see that AMD on Tuesday formed a lower high at 9:30 and then again at 10:30. So between a 1 hour gap, AMD formed a lower high. Lower high? Oh, sorry if I said lower high. I meant to say higher lows. Higher lows are a bullish indication, and essentially AMD had formed higher lows while ES had formed lower lows. So to me, that's telling me that there is high interest in AMD for this specific day. Another way I identify relative strength and weakness is I gauge the entire move in a specific period of time. So you can see that AMD moved from a low of 72.75 all the way to a high of 75.62 with no real period of consolidation. You can see that we had a nice $3 move up, which is huge on AMD, and there were no red candles essentially. You can see that ES made lower lows, so AMD is clearly stronger than ES. And you can see that while NQ did have a nice move up, it's what I call a healthy move up. A healthy move up is when we move up with red and green candles, because that to me is just a normal move up. But when we have an aggressive move up like this with no red candles or no real period of consolidation, that's telling me that buyers are clearly interested in the equity for the specific day. So that's step one, identifying relative strength and weakness. I talked about strength, but weakness is the same thing. Us forming lower lows while the market is forming maybe lower highs. Um, or maybe we have straight red candles while ES and NQ are choppy or maybe a slow move down. So essentially, that's the first thing I do. I'm going through the list of my main equities in the morning um, at market open, and I'm identifying what has relative strength and what has relative weakness. The next thing I do is I'm identifying certain key levels or areas to take long or short. So I can just give you a quick example with AMD. 70 and 80 are key psychological numbers. They're rounded numbers. So a lot of traders pay attention to certain levels like these. In addition to that, I do use Dylan's key levels because they are very accurate. And he's basically already found support and resistance for all of these equities. So you can just use his levels as well. One of the levels was 76, and you can clearly see that on Monday, AMD held this $76 value very well, and then we gapped down, and we didn't reject 76 perfectly, but we did reject in this general area. So 76 is a key level. So after identifying that AMD has relative strength, I know that 76 is a good area to take long. So that's the second thing I do. I identify certain key levels, which can be a prior high day, Dylan's key levels, psychological levels. So any area where I can potentially take long. So that's step two. Step three is I identify where supply and demand price imbalances are on the chart. So what I mean by this is if you go through the course, basically supply and demand is where institutions have their buy and sell orders placed. So you don't want to buy when institutions are selling, and you don't want to sell when institutions are buying. It's really as simple as that. So you can see that I kind of just drew this out because it is Friday, so I don't have the zones drawn up perfectly, but I remember us having a supply zone. I think it was a 45-minute supply zone at 77 for AMD, so I just roughly drew that. But say for instance, maybe AMD had a supply zone at maybe like 76.5. So if AMD had a supply zone at 76.5, why the hell would I take it, or excuse my language, but why would I take it long above 76, targeting 76.5 when the risk to reward is skewed? So essentially, I just want to make sure that the supply and demand price imbalances are somewhat far away from the key levels, so there is a good risk to reward ratio. So for me, that's step three, identify where supply and demand price imbalances are on the chart. The fourth thing I do is I identify what ES, NQ, and VIX are doing. If I'm just going to list out a couple of rules that I have. If ES and NQ or either one of them are in a fresh supply zone, or if VIX is in a demand zone, VIX and ES and VIX in versus ES and Q in the equity. So if ES and Q are in a fresh supply zone, or VIX is in a fresh demand zone, I don't want to take a long position because those are potential areas where the market can reverse. Same thing on the flip side. If ES and Q are in a fresh demand zone and VIX is in a fresh supply zone, then I'm not going to take the market short because institutions have their buy orders placed there. So those are just a couple of rules. Another rule is that if ES and Q are making a nice move higher, then I don't want to fight the trend. I'm only looking for long opportunities. I don't want to consider short opportunities at all. I just want to go with whatever the trend is. So in this case, you can see that ES didn't really have a direction, but NQ was moving nicely, also forming a higher lows. So to me, I don't really see a clear reason to play puts. I just want to continue. I just want to go with the trend. AMD is also moving up as well, so no reason to play puts. And it's really as simple as that. I don't want to overcomplicate it. If the market is moving higher, I'm looking to take a long position, and if the market is moving lower, I am looking to take a short position. So I talked about ES and NQ and VIX. I'm also looking at supply and demand price imbalances for ES, NQ, and VIX, and I'm also looking at general key levels. So say that ES fails at a major resistance level, then I'm kind of not looking at calls because ES cannot get above that level. And if ES can get above that level, then now I'm looking at long opportunities again. So I'm really looking at what ES, NQ, VIX are doing and if they are supporting my thesis. And essentially the main thing with ES, NQ, and VIX is I just want to make sure they are not getting in my way. If there's a clear red flag, say that ES is in a supply zone or it's rejecting a key level, then I do not want to take it long because price cannot get above that level. So that is the fourth thing I do. I look at what ES, NQ, and VIX are doing. The fifth thing I do is, and to me a very, very important thing, is I look at volume and momentum. And essentially, I try not to overcomplicate it because I know volume analysis can get a little bit complicated at times. But essentially, what I'm asking myself is there momentum leading up to the break? And is there momentum for the equity on that certain day? So I'll just go through this AMD example. It's really not the best, but you can see that we did move up somewhat nicely in the morning on good volume. Then we did pull back on lower volume. And the main thing which caught my interest is that from 11, I can just highlight it actually. From 11:05 to, what is this? 11:05 all the way to 11:15, we had increasing volume towards the break. So just a couple of rules. The first thing I want to see is, do we have increasing volume towards the break? Essentially, that means that there are increased buyers willing to pay a higher price, so that's a good sign. A big red flag for me is if we have decreasing volume towards the break, because to me that's letting me know that buyers are losing interest. Another volume thing is I tend to see us move higher on increasing volume, pull back on lower volume, and then move again on higher volume. So all I'm asking myself with volume is there a major red flag with volume? If not, that is another checkbox for me, and I am ready to move on to the next step. And finally, the sixth step for me is I'm looking for impulse and consolidation. What does this mean? I kind of discovered this as I kept on trading, but essentially the market will never move up straight. So AMD moved from a low of around 73 all the way to 77, which is a big, big deal. Today is Friday. AMD was up 2% and it only moved 1.5. So, I mean, if we move up like 4 points, that's like a nice 7 or 8% move on the underlying asset or equity, which is a big deal. But the market will never move straight up. You can see that from 9:30 to 9:55, we had a nice move up. And then for the next hour, we really couldn't get above the 75.5 level. We consolidated in this general area. And then again, we moved up nicely. We had a nice like $1 move up. And then for the next hour, we consolidated in this range. And then after that consolidation, we moved up nicely. So essentially, what I'm asking myself is there any real period of consolidation before taking the equity or taking the option long? All I want to make sure is that I'm not chasing an impulse move up. So I wouldn't buy at 9:55 because we had a strong impulse move up. I want to wait for some real period of consolidation. You can see that we consolidated for an hour before taking it long again. Let me close the door. Give me a second. Yeah, sorry about the mom's on the phone. But so that is the sixth thing I make sure. I just want to make sure there is a good enough period of consolidation, because to me that's letting me know that buyers or sellers are ready to take it higher or lower again. So those are the six things I look at when I'm trading. First, I'm looking at relative strength or weakness. Two, I'm looking at potential areas to take it long or short. Third, I'm looking at where supply and demand price imbalances are on the chart. Fourth, I'm looking at what ES, NQ, and VIX are doing. Fifth, I'm looking at volume and making sure there's no red flags with volume. And sixth, I'm making sure that there is some real period of consolidation before taking it long. And this is pretty much what I do every single day. Um, the reason I take high quality setups is because I want to make sure all six of these criterias are met before taking the trade long, essentially, or short. Yep, I think I'm gonna end the video here. It is 15 minutes. It is a little bit of a longer video, but I just wanted to uh, recap my entire thought process and what I do every single day in detail, so my videos are easier to follow in the future. But I hope you guys have a nice weekend, and I will be back to trade again on Monday.